Shifting focus to broader African markets now, the African Development Bank Group expects lower GDP for a growth for the continent this year, and in 2026, the investment bank downgraded its expectations on account of subdued global economic activity and its overall impact on emerging markets. On the other hand, the AfDB's upped its outlook on East Africa's economy this year to nearly 6% from 4.3% in 2024. Ridel Markus, SSA macroeconomist at Absa CIB, joins us with his analysis of the projection. Ridel, thanks so much for your time this afternoon. But as we start off, let's look at the overall forecast for the continent. Are you surprised by this outlook, considering the global shocks that have been pushed through, and we've also seen other international institutions cut growth forecasts for the global economy as well as the region?
Hi, good afternoon, Ntalang. So it's interesting that you mention it. We've always found that the AfDB do tend to be slightly more upbeat than some of the other global forecasters, not by much. And we were not surprised that they only cut the growth rate for the continent, or at least for sub-Saharan continent or region, by 0.2 percentage points, whereas we've seen, for example, the IMF in its April economic outlook cutting it by, I think it was close to half a percentage point. Now, of course, as you mentioned, some regions such as East Africa does look very strong, and it has traditionally been a very strong growing region. But there are other regions, of course, that's not doing so well. For example, parts of West Africa and also parts of Southern Africa that is struggling. In the East African space, I mean, we do have markets such as Uganda and Tanzania. There's got very, very strong growth rates. Even Rwanda has got very strong growth rates. Kenya at around 5% this year, as according to the African Development Bank. It's probably slightly lower than what the bank said a year ago when they expected 5.6%. But there are very sort of specific challenges in the Kenya story around fiscal challenges, etc. Though I suppose many other parts of the region wouldn't mind having 5% growth.
And before we get into those particular regions, you started off by saying that the AfDB is much more positive than other institutions. And just in light of that, do you think then the AfDB has accounted for the full impact of those tariffs that could come into effect, or maybe they've just taken precautionary measures, considering that we just have that 90-day pause for now?
It is very likely that the AfDB obviously take a very different view on how these tariffs will impact on the continent. Keep in mind as well that many of the products, commodities produced by the region are actually excluded if you think about oil, gold, copper, etc. So it really depends on how you look at it. I mean, of course, the IMF/global growth also by around half a percentage point. And, it's just a matter of taking different approaches. You could argue that the IMF, at the time that they were about to issue their report a few days before, or maybe 2 weeks before, then the tariff announcement came. So you could argue, for example, that the IMF may have been too pessimistic, but you could also argue that that the African Development Bank, having thought through it, over a couple of weeks, probably had more chance to digest what is happening and could have anticipated or could have taken into account the fact that there's a suspension of these tariffs at least until July. So very different approaches, different timings, etc. When you consider, when these forecasts were made.
Okay.
But I think both the African Development Bank and the IMF, I think it's important to highlight that both of them do believe that growth will be better than last year. There's a high level of uncertainty. There's a lot of downside risk when you think about geopolitical risk, when you think about very volatile weather conditions on the continent. And at a more global level, of course, US policy has brought a lot of uncertainty into trade alignments, and you can see that shifting trade alignments across the globe. So the forecasts are likely to be fairly bumpy over the next year or too. There's going to be a lot of changes. And as things perhaps come down in the second half of the year, maybe you might even see more upbeat forecasters coming through towards the end of the year. But I think what is certain at this point in time is the only certainty is there's a lot of uncertainty. But what is fairly clear at this point in time is that markets that produce gold and copper, for example, those kind of commodities, they are really standing strong. And markets as importers of oil, for example, the East African economies, they are likely to benefit. And you can also see that, for example, if you just look at Kenya, how solid the currency has been. So different markets, and depending on whether you're exporter or importer, will have a different impact of the current global volatility.
And that brings me to my next question. With East Africa emerging tops in that report, what's fueling that optimism when it comes to growth forecast? You did touch on commodities like gold and copper, and gold influencing Kenya.
Well, in East Africa space, I think if you think about the development around energy and the energy infrastructure between Uganda and Tanzania, and also Kenya itself having some energy resources that are waiting to be developed. So, infrastructure investment, especially infrastructure around the energy sector, is probably what is driving the East African growth rate. In fact, we think that Uganda, once they start producing oil, could easily grow up to 10% in over the next 2 years or so. It probably won't happen this year and it won't happen next year, but there's a good chance that by 2027 you see this huge increase in or surge in growth in Uganda, whereas in Tanzania, they are also busy with the LNG projects, but they're also benefiting or working on the East Africa pipeline. There's railways being built across the region. So infrastructure is really a key driver there. But of course, the agriculture sector has performed very strongly over the past year or so. The La Nina impact has been much weaker than we had anticipated. And in addition to that, you've got lower inflation, policy rates coming down across the board. So, and especially in Kenya, policy rates coming down. So you've got the low inflation environment that's also stimulating demand. So there's quite a few positive drivers for that East African region, I think, that justify the growth of between 5 to 6.5% over the next few years.
And what's playing out in Southern Africa, Ridel, that also doesn't seem like a region where they're expecting as much robust growth as East Africa?
I think the disappointing aspect about Southern Africa is that two of the largest countries in the region, South Africa and Angola, are probably lacking growth. Angola being hit by the lower oil prices after an exceptionally good year last year, 4.5%. South Africa has been a growth laggard for a while. And then, of course, weather conditions in the southern region has really dented growth over the past year or two. Think about Zambia, for example. Despite the fact that growth in Zambia came out around 4% last year, the reality is that for most of the year, there was a crippling drought. But so that drought also dented growth activity in Namibia, Botswana, and of course Zambia. And then also, if you think about Botswana and Namibia, for example, how the collapse in global diamond demand impacted those two countries. So very specific sort of idiosyncratic issues involved here. Think about the post-election violence in Mozambique, for example. So all these markets in Southern Africa seem to have these very specific challenges that have hampered growth last year, and some of them are still present this year. But of course, we always remain positive, and we always believe that government will take corrective action in the various areas, and that we can look forward to stronger growth. But I think Southern Africa growth will just not get anywhere close to what we see in East Africa.
And talking about Southern Africa, South Africa in particular, out with those GDP numbers, growth of 0.1% in Q1, nothing to be really excited about. You also touched on lower oil prices affecting Angola in Southern Africa. Is that what we're seeing also play out in Western Africa? I think of the likes of Nigeria.
Yeah, so interestingly, Nigeria was a very good story at the beginning of the year because of its reforms, and it's still a strong story. I think we saw Moody's upgrade of Nigeria just at the end of last week. So it is clearly a good story. Lots of reforms taking place, but the fall in oil prices have dented the growth story in Nigeria a little bit, and specifically around fiscal and also bringing more uncertainty around the currency path for Nigeria. But there are other stories also that, if you think about Senegal and the debt issues in Senegal, despite the fact that oil and gas are now flowing in Senegal, that the debt fiscal issues is a big challenge for markets such as Senegal. But there are markets such as Ivory Coast, the Baleen field, they're pumping more and more oil, and that economy looks to grow between 6 and 6.5% over the next few years. So there are strong stories. And then Ghana too, the gold prices has shot up. Ghana gold production is much higher. Inflation is coming down. We expect policy rates to start coming down sharply from July. So Ghana's quite a strong story. So West Africa is being driven by quite a few stories that stand out, despite some of the weaker stories in that region.
All right, Ridel, thanks so much for your time and just unpacking that outlook report for us. That was Ridel Markus, SSA macroeconomist at Absa CIB.